We are in a crisis. Not the kind you see on headlines and forget in 2 days, the kind that quietly rewires the entire financial system while most people are still trying to understand what just happened. Oil routes are under pressure, global tensions are rising, central banks are buying gold at record levels, and yet gold is falling. Think about that. The one asset you were told would protect you in chaos is going down while the chaos is happening. So either the system is broken or you've been taught the wrong rules. And this is exactly where people lose money, because what looks like a contradiction is actually a pattern that has repeated for over 50 years. And once you see it, you will never look at gold, war, or money the same way again. Because according to Ray Dalio, the biggest mistake investors make is confusing what should happen with what actually happens. Let me show you the mechanism, not opinions, not predictions, the mechanism. Every major crisis follows the same invisible sequence. War starts, or even the fear of war appears, and the first thing that moves is not gold, it's oil. Oil spikes, and when oil spikes, something even more important happens. Inflation expectations explode. Not actual inflation yet, expectations. And that one shift changes everything. Because the moment inflation expectations rise, central banks get trapped. They can't cut interest rates. And if they can't cut rates, bond yields stay high or go even higher. Now here's the part most people don't understand. Gold does not compete with fear. Gold competes with yield. If investors can get 5% guaranteed from government bonds, they don't need gold in that moment. So money flows out of gold and into bonds. At the same time, global investors rush into the US dollar, because in a crisis, the world still treats the dollar like the ultimate safe zone. So now you have three forces hitting gold at the exact same time: high yields, a strong dollar, and trapped central banks. And that is why gold drops while the world burns. Not because gold is weak, but because the system is working exactly as it always has. This is the part nobody explains, and this is where most investors panic. They buy the spike, then watch it fall and think they were wrong. But they weren't wrong about gold. They were wrong about timing. Because what comes next is where everything changes. This suppression does not last. It never has. Because there is a second force in the system, much bigger than yields: debt. Massive, unsustainable global debt. The kind of debt that forces governments into impossible decisions. And right now, that pressure is building fast. At some point, bond markets realize something critical. Rates cannot stay high forever, because if they do, the cost of servicing debt explodes. And when that realization hits, everything reverses. Yields stop rising, the dollar weakens, liquidity returns, and gold does what everyone expected it to do from the beginning, but faster, more aggressive, and far more violent. This is not theory. This exact pattern has played out again and again. In the 1973 oil crisis, gold didn't explode immediately. It dropped first. Then it went on to rise massively in the following years. Same story in the Iranian Revolution. Oil shock, initial confusion, then a powerful gold rally. Even after the September 11th attacks, markets collapsed, uncertainty spiked, and gold began a long-term upward move. So the question isn't, why is gold falling? The real question is, which phase are we in? Because every crisis moves in phases. Phase 1, panic. Everything moves fast. People react emotionally. Prices spike, then reverse. Phase 2, confusion. This is where gold pulls back. This is where most investors quit. This is where they sell, right before the real move begins. Phase 3, accumulation. Smart money steps in quietly. Central banks keep buying. The structure tightens. And then, Phase 4, the breakout. New highs, momentum, media attention, and suddenly everyone wants in again. But by then, the opportunity is gone. This is the cycle, and right now we are not at the end of it. We are in the middle of it.
which means the biggest move hasn't happened yet. And if you zoom out even further, the setup today is stronger than ever before. More debt, more money printing, more geopolitical instability. And one more thing most people are ignoring. Central banks are buying gold at record levels, not selling, buying. Because they understand something the average investor doesn't. This is no longer just about inflation. This is about trust. Trust in currencies, trust in systems, trust in the future of money itself. And when that trust starts breaking, hard assets become the only anchor left. That's why this isn't just a gold story, it's a system story. And people who understand this difference position themselves early. Not when it's obvious, not when headlines confirm it, but when it feels uncomfortable, because that's where the real money is made. So now there are only two types of investors left. The first one sees gold falling and thinks the opportunity is gone. The second one sees gold falling and understands the mechanism behind it. One reacts, the other prepares. One follows emotion, the other follows structure. And the gap between those two decisions is where wealth is created. Because in every crisis, the market doesn't reward panic, it rewards understanding. And right now, most investors still have no idea what's coming next. Now you do.